Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston. It's a run and walk to support the DAV Department of Massachusetts. Register now at dav5k.boston.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here, and as we kick things off to close out the week, been what I think most would describe as a pretty volatile week. And despite that, Mike, and despite the headlines from the New York Times, Wall Street on edge after a week of wild swings, the interesting thing is that the S&P 500 right now is actually basically where it was last Friday morning before this week of wild swings, and is also in the exact same place that it opened on June 5th and closed on May 28th. So for all of the hype and hubbub, it's not like we've seen any major move in a single direction in any convincing fashion. We still have not seen a 10% pullback on the S&P 500 from its all-time high.
Just one more piece here. It's as flat as the S&P 500 can possibly be. It is down less than 1 point right now, which is 0.01% at the moment. So,
which is good. It's you want to
off.
see calm days return to markets. That's the sign that a market is trying to kind of get back to normalcy, is when you see calm days. A day like yesterday, while it might be exciting to see that strong rally, you do want to see a little bit more subdued trading and volatility receding, because that means that investors are generally feeling more confident in their approach and their valuations on different securities that are out there. So, look, a calm day, I think, would be, kind of a nice finish to this week. Sure, we'd all like to see the market. Well, I guess if you're short the market, you wouldn't like to see it, rally. But in general, most people would like to see a little bit more of a rally, but there's a reason that you might want to root for some calm as well, because that tends to be something that helps to let markets find their level and regain their footing a little bit before next week, which is going to be a busy week as far as broad economic data. Every day but Monday next week has a fairly important report attached to it. Monday's pretty quiet. There's nothing of any meaningful note there. But Tuesday we get the Producer Price Index data, the PPI. Expectations on that, I'm seeing if I can dig anything up. All I see is on the headline, consensus estimates are for 0.1% month over month. For inflation, the CPI report that is due out on Wednesday, core inflation expected to be up 0.2 to 0.3%, headline at 0.2. And then on Thursday, we're going to get retail sales, which are expected to grow by 0.2 to 0.3% as well, month over month. Jobless claims will come in next Thursday as well. And then we finish up the week with building permits and housing starts. Permits expected to be basically flat at an annualized rate of 1.44 million, and housing starts expected to be basically flat at an annualized rate of 1.35 million as well. But for, big days of economic data next week. Friday, we also do get the Michigan consumer sentiment data coming out, which has inflation expectations embedded in it as well. So you've got a busy week of economic data next week after kind of a data vacuum over the course of this week, Mike.
Agreed. And in terms of earnings, too, nothing that is as massive a market mover as, say, Apple, Google, Microsoft, what we were receiving last week. But Home Depot will be reporting earnings on Tuesday. That's always a good look into the housing industry as a whole. Cisco Systems going on Wednesday, which is just not that impactful. But then Walmart on Thursday, big indicator, largest private employer still in the country, I believe, right? Amazon has not surpassed them. So a few big earnings reports from at least major companies in their own industries in their own right. So, yeah, it is a bit of an uptick next week with more data coming out. And clearly, after yesterday's unemployment report, the jobless claims numbers, this is a market that is very, I guess, sitting on edge waiting for the turn in this economy in one direction or another, and not that a 2% rally on something as little as jobless claims numbers is a good indication of things, but that is what we saw yesterday, and I suspect that we will see more of it until there's more certainty about which direction this economy is going.
So this is where things sit as we, get closer to closing out the week. There's another piece from the New York Times that is titled "How to Cope When Markets Panic." And I'm curious to get your sense, Mike, as far as what is laid out in this piece as what to do when things are getting a little bit wild in markets.
Quite honestly, it's not all that different from, I think, a point that I have made before. So the subheadline here, take a deep breath and make sure you're well positioned for a potential storm, our columnist says, but stick it out for the long haul. My point that I have made is, for a lot of people, so long as you have considered the potential for a recession and what that means for stocks in the downturn and understand how your portfolio is or is not prepared for it, then in most cases when markets are going up and down by 2-3% in single days, oftentimes the answer is don't do anything. But that caveat being that if you have not asked those questions and you don't know the answer to them of how I am positioned for a potential market downturn, then sitting there and doing nothing is oftentimes not a good idea. So I don't know. I think it's actually not that bad of a written piece on how to react to the panic that we've seen over the last week.
Yeah, it does speak to doing the legwork up front in terms of, hey, make sure that you are set up in a way that you're comfortable before you see volatility, because once volatility hits, it's not really a great time to be trying to manage that. Now, it is also something where there are situations in which you might say, okay, I do need to do something just in order to mitigate this from, kind of an imminent liability perspective. And what I mean by that, I'm not talking about liability in like the legal sense, but more in terms of an obligation that you have to fulfill. And here's an example of this. Let's say that you have a kid who's heading to college this fall, and you've got a tuition payment that you need to make in September, a month or so from now. and you had said, you know what, I'm going to leave that money in the market just because, the market's been doing well this year. I want to make a little bit more. Well, this is a case where just because the market has fallen 10% or 8% or however much, depending on exactly what you were invested in, fell, there's no guarantee that it won't necessarily fall more. And so if you have a tuition bill for $10,000 due and you had a situation where, gee, I had it, it was up to $11,000 and now it's back down to like $9,900 or whatever, what do I do? Do I try to let it go? Look, things could get a lot worse over that time. And so if you have something that's imminently due, there's a case to be made that, yeah, you're better off kind of cutting your losses and managing that risk that way, because that $10,000, if things do break the wrong way in markets, it could very easily turn into $8,000, and then you've got a bigger problem on your hands that you're trying to manage if you have misallocated assets from a timing perspective to begin with. Is that a fair assessment, Mike?
Yeah, it's perfect, and I think it fits into that overall story, right? Like, you have to, at any point in markets, whether they seem like everything is going perfectly or that we're on the verge of a recession, as a lot of people are saying right now, you have to assume that it's about to turn down, and you have to do the legwork way up front to understand that, that tuition payment that's due in 6 months has no business being anywhere near risk assets, regardless of what's happening in the economy and markets. And so, that's the preparation that I talk about of, do I know how I will react to a 30% market downturn that can come out of nowhere? That's the type of preparation that I'm talking about, and that's better put, Chuck. Hey, what are my liabilities over the next couple of years? Do I understand where the money would come from if things fell apart?
And ultimately, when we talk about the idea of financial planning, the more that I've kind of been in the business and looked at this stuff, ultimately it's all about matching up your assets, the timing of when they're available to you, with the timing of your liabilities in the future. So if you're retiring 30 years from now, you sit there and you say, okay, maybe there's a convincing case for me to have all of my retirement assets in equities if I can stomach the volatility, because I don't need them in the short term. I don't care what they do in the short term. Great, I can have those invested over the long term there. If you're someone who's 62 and retiring in 3 years, it becomes much more, the money that I'm not using until 75, 77, 78, I could have that invested more aggressively, but the funds I'm going to need at 65 in 3 years, I need to have something that's safer, more liquid, and more accessible, because I'm going to need them sooner, and so I need to match the asset that I have with when the expected liability is, and I think that's a big, big part of financial planning, quite honestly.
Yeah, I think what we talked about, you and I talked about this perhaps yesterday on the show, individual investors have one big advantage over money managers, corporate CEOs. Like, I recognize we all look at those others as, these are the guys with the edge, and these are the ones that are going to be able to outperform. But ultimately, those people answer to their constituents at the least on a quarterly basis. And you as an individual don't, right? Most individual investors that are investing today have at least a 20-year investment time horizon, even if you are 65 years old or more. And so that's your advantage, and play to it. Like that to me is one of the biggest advantages that the individual investor has, is time. And it can cut both ways, but that is, if you use it right, a significant advantage over others.
Let's take a quick break here. When we come back, we'll answer the question posed in the Wall Street Journal. Has the United States economy reached a tipping point? Ooh, a tipping point. That sounds quite exciting. We'll fill you in on our thoughts when we return.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network. Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are three of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Recent reports suggest that a record 4.1 million Americans may retire this year alone. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're one of them, you'll want to have a retirement plan in place that focuses on several objectives. When to actually retire is a very important one to consider. Retiring early while giving you more time to enjoy life after work also means you'll need your money to last longer. Retiring later may not give you as much time to enjoy life's pleasures, but you'll have more time to save money. It's important for your retirement plan to strike a reasonable balance, and our new guide may help. It's called A Day in the Life of a Retiree, and it's yours free by calling 800-393-4001. The guide discusses these issues and more, so please call 800-393-4001. Once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud partner of the Disabled American Veterans, Department of Massachusetts. The DAV does incredible work, and it was one of the first organizations I became familiar with after my military service ended in 1984. As I built my company, Veterans Development Corporation, I did it knowing that I'd be giving back to fellow vets who need jobs, support services, medical supplies, and much more. I work with disabled veterans every day, and is one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans, Department of Massachusetts, in this year's DAV 5K Boston. Please join me in supporting this tremendous cause by taking part in this year's event or by making a donation to the DAV.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Protecting your assets is your most important financial responsibility, and creating a trust is a great way to help. Cushing & Dolan are experts in elder law. Their brand new guide out this month is called Unlocking the Power of Irrevocable Medicaid Trusts. There are many types of trust to consider, but irrevocable trusts can establish the kinds of safeguards you'll need to protect your assets long term. Learn about how the trust can protect your assets from probate and potentially eliminate your estate taxes. If you're closing in on retirement and have an existing trust that needs a second look, or if you need a new trust to ensure that your assets are secured, call Cushing & Dolan right now at 866-848-5699 and let them help you create a plan that gives you confidence in your financial future. That number again is 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race is Saturday, November 9th at Fort Independence on Castle Island. And registration is now open. Help us support these great American heroes by visiting dav5k.boston and registering for this year's race. Your gifts will support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information or to make a donation, visit dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
Mike, let's talk a little bit about this piece in the Wall Street Journal here. Its title has "The U.S. Economy Reached a Tipping Point," and it's asking the question that everyone's asking this week, which is, hey, is there a recession coming, or is this just a garden variety growth slowdown that tends to happen every 2 to 3 years instead of recessions, which tend to happen again, depends, exactly what you're talking about, but, more kind of every 7 to 15 years, depending on the business cycle that you're in. The data that's cited in this piece for the slowing is largely heavy on what we're hearing from earnings reports in the consumer space. Companies like Disney saying that parks are slowing down, airlines saying they're seeing soft travel bookings, home goods products manufacturers saying, hey, we're seeing some weakening consumer demand. These are the things that we're seeing because ultimately a lot of the hard economic data has actually been, not great, but not pointing towards recession either. And some of it, like what we've seen from retail sales in the last month, has been pointing back in an upward direction, kind of counter to some of the other data that we've seen recently.
Well, let's be clear about something, Chuck. Do you know of any forecasting models that take into account forward projections from corporate earnings or corporate executive commentary on earnings calls in order to predict recession? Because I sure don't.
No, and in fact, it has not been a great predictor of recession even recently.
So, sorry, go ahead.
There were cases in the spring of 2022, and by spring, I know that everyone knows what the spring is, but it's kind of a wide, it's 3 months. I'm talking like the, May, June period when we started getting into earnings season then. We were getting reports, and I remember it clearly. You had, in a span of a couple weeks, both Restoration Hardware, which is like ultra high-end, like, hey, do you want to spend $10,000 on a dining room table? Mm-hmm. And Walmart, which is like, do you want to spend $3 on a dining room table? They both came out and said, yeah, we're seeing some real problems with the consumer. There's a potential issue here. And interestingly enough, as soon as they said that, the U.S. economy started to perk up. Remember, the first 2 quarters of GDP in 2022 were negative. Like, it was all of the nominal growth was eaten up by inflation, but the economy actually started to improve as you got to the second half of the year. So that was a very clear case where what companies were telling us, specifically in the consumer space, was not reflective of what was actually going on in the broader economy. Now, part of this is because the companies that were telling us this, they were largely selling things. It was retailers who were giving us this news. Airlines and hotels and theme parks and yada yada were saying, yeah, we're still pretty jammed. So you still had that engine that was going. Today, there is a key difference. Your airlines and hotels and things like that, they're saying, yep, we're slowing down. And you're getting commentary from retailers as well saying, yeah, we're seeing some slowdown too. So that is a key difference in terms of what we're seeing now compared to before that makes me a little bit more nervous about the potential of a recession.
Yeah, it does me too. I'm right there with you. I just can't point to any studies that say, oh yeah, when companies do this, when companies say that, it points to recession, and here's the context for it. So I'm more willing to discount what, for instance, Disney is saying about their parks than I am some other data points. So you pointed out that there are a lot of data points that have been indicating slowing, but others that are pointing still towards no recession. Can we focus for a minute on the data points, like published economic data points that people have actually looked towards in the past that might be indicating recession? So certainly there's the yield curve that has now been inverted for quite some time, but remains significantly inverted on the 10-year yield. And historically, that has been a recession indicator that economists have pointed to, albeit an imperfect one with some false positives. What about like temporary hiring, right? That's been showing some significant weakness, and that historically was used as well, right?
Yeah, it's... If we look at that series, sorry, I'm just pulling it up right now just because I didn't have it front and center with me. But if we look at what's going on in the labor market, temporary hires are a great leading indicator historically of where the economy is going. The reason being, when you're first coming out of a recession, companies aren't really sure if they want to hire someone full-time, so you see this jump that happens in temporary hiring because they say, yep, we're going to move into the temp market before we move into the full-time, we're committing to you market. On the other hand, what we typically see during the lead-up to recessions is that temporary hires start to drop because companies say, look, we might have had, temporary hires that we've had on board. We're not sure we want to get rid of our full-time workers yet, but we're just not going to renew these temporary workers' contracts after they expire, and so temporary contract work tends to roll over. What we have been seeing is a decrease in temporary workers since February of 2022. So here's the catch on this, is that normally the rolling over of the number of temporary workers is a pretty quick lead-in to an actual recession. And we don't have a ton of data on this just because the data that we have on temporary workers only goes back to 1990. But that curve, it started rolling over in mid-90, and you had a recession by later that year. Likewise, in 2000, you started seeing a rolling over in April of 2000. You had a recession by February of 01. In the lead-up to the financial crisis, you peaked in December of 06. You had a recession December of 07, a year later. So what's different here is that temp workers have been declining for the last 2+ years now. Still no recession. This is what we talk about when we say that a lot of indicators have kind of gotten broken in this cycle. Quick break. We've got Wall Street Watch next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston. It's a run and walk to support the DAV Department of Massachusetts. Saturday, November 9th at DCR's Castle Island in South Boston. Together, let's honor all who have sacrificed for our freedom. Register or donate now at dav5k.boston. That's dav5k.boston.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up, because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled A Day in the Life of a Retiree. Mike, one of the key focuses of this piece is about how to figure out how much income you actually need in retirement and where you start tapping assets from. How do you make those decisions?
Yeah, don't you hate the rules of thumb on this, right? Like, oh, I'm going to need 80% of what I had before. The answer is that there is no rule of thumb. There's no good one that you can use to figure out how much income you are going to need in retirement. Do you have a mortgage? What sort of travel are you planning to do? Yes, you won't be commuting as much. Maybe you and your spouse can go down to one car, but if all of a sudden your plan is to dramatically increase your travel budget, that changes everything.
And when you look at other things that can matter, it could be, where's your family located? Are you planning on moving somewhere else? Do you have grandkids that you want to spoil? These are all things that are going to play into that discussion of how much money you need to retire on.
Yeah, no doubt. And so it really does start right there with assessing your retirement ability. It's what type of income am I going to need in order to just be happy. It's not necessarily about maintaining lifestyle. It might be a different lifestyle once you're retired, but will I be content with it? And what sort of activities and lifestyle am I looking for once I am done with that 9 to 5, once I'm done putting in the hours for working and saving for my future?
Our guide this month is titled A Day in the Life of a Retiree. The way to request it is by calling 800-393-4001. Again, it's titled A Day in the Life of a Retiree, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, one day after the S&P 500 notched its best day since November of 2022, markets today are mostly quiet and dipping into negative territory. Right now, the Dow is off by about 0.25% or 105 points. S&P 500 is off by only 6 points, and the Nasdaq is down 0.25% as well, or 42 points. Russell 2000 is down by only 3 points. 10-year Treasury yield down by 6 basis points, now at 3.92%, and crude oil is up about 0.25%, trading at $76.35 a barrel. Shares in Taiwan Semiconductor up by about 0.25% after the chip maker posted strong revenue in July, which showed an increase of nearly 45% year over year. Meanwhile, Expedia beat second quarter earnings on the top and bottom lines. However, the travel company cautioned that macroeconomic factors weighed on travel demand last month. That stock up by 7%. Elsewhere, shares in video game maker Take-Two Interactive up by over 3%. After the company posted higher quarterly revenue and a wider loss, the latter due to heavy spending on marketing for new mobile games. Dropbox up by 1% after the cloud storage company beat second quarter earnings expectations. Trade Desk shares are up by 9% after the ad buying company beat second quarter forecasts and hiked its third quarter outlook. And Paramount Global shares are up by over 3% after the media company beat earnings forecasts but fell short of revenue estimates. Paramount also announced plans to cut 15% of its workforce as it cut costs ahead of its merger with Skydance. I'm Tucker Silva, and that's Wall Street Watch.
Mike, Tucker forwarded on an email from a listener who was listening to our show yesterday, and I thought it was pretty relevant, so I want to read it and then address it because I think it's a great email and a great question.
It is a super good question. I love that Pam and Jack, who are listening, had listened this closely and then asked this question because it's a really good one. Go ahead.
It says, hi, yesterday you mentioned both political sides falling short of serious discussions and plans to protect Social Security's future, a valid observation. As I can see Trump being accused of wanting to eliminate Social Security as a tactic by Democrats to elicit outrage and fear, I also see Trump announcing his initiative to make Social Security income tax-free as a way to attack this false charge. A question that I have about your critique is that eliminating taxes on Social Security income and how that further depletes the national Social Security kitty. While I can see any reduction of taxes in any category reducing incoming money, I wasn't aware that the Social Security income tax collected went directly to the Social Security account. thought it went to the general U.S. Treasury Fund. Maybe others would like to learn more about how tax money collected is tied to specific U.S. Treasury accounts and only to be used for those specific account expenditures. And then they go on to say how much they love our show, which is always great to hear as well.
That is nice, too, yeah. A little flat on a Friday.
I'm going to quote from the Tax Foundation because they actually study this stuff in depth, and I don't. I read things that really smart people write after they study it. So I'm going to quote here on this, and again, this is specifically what they say because they actually understand where all of this goes here. To quote them, income tax revenue collected from Social Security benefits is allocated to the Social Security and Medicare trust funds. The revenue from taxation of up to 50% of benefits is dedicated to the Social Security Old Age Survivors and Disability Insurance Fund, so that's Social Security as we know it, while the remainder goes to the Medicare Hospital Insurance Trust Fund. Exempting all Social Security benefits from income tax would therefore reduce revenue going to Medicare and Social Security. According to data from the 2024 Social Security and Medicare Trustees reports, the trust funds will collect about $95.3 billion in revenue from income tax in 2024, rising to over $228 billion in 2033 as the population ages, total of $1.6 trillion from 2024 to 2033. Now, again, that's the total from income tax that they are going to collect there. Exempting all Social Security benefits would likely accelerate the insolvency of the trust funds. For Social Security, it may move insolvency up 2 years from 2035 to 2033, and for Medicare, it may move it up 6 years from 2036 to 2030.
So I had to look up the answer to this question too, Chuck, because in my mind, right, I think most people working, they see that, you see COLA coming out of your paycheck, and you know that's going to the trust fund. Social Security and Medicare trust funds, that's going there. You don't have COLA coming out of your Social Security check, and so I concluded the same thing that Pam and Jack did initially, which is if you eliminate taxes on Social Security, yeah, you're eliminating federal income taxes, but no, specifically
you mean FICA, not COLA.
Sorry, I did mean FICA, not COLA. My bad.
Yes.
But in fact, yeah, under the legislation enacted in 1983 when Reagan signed this thing, that new tax revenue that was created by taxing benefits goes directly to the trust fund, and eliminating it, therefore, depletes that trust fund faster.
Now, most tax revenue that comes into the U.S. Treasury is not specifically allocated to specific programs in this fashion. In many cases, it simply goes into the Treasury General Account, the TGA, and then can be used for whatever spending is authorized by Congress. But there are some programs in some cases that do have specific lanes that they have to follow as far as where the revenue has to come from and then where it ends up going. This piece here on that taxation of Social Security is one of those such pieces. The Tax Foundation also did an analysis. They said, hey, look, what would this actually do to GDP? Like, let's talk about, like, as long as we're digging in on this, let's really dig in. And they said that the long-run economic effects of exempting Social Security benefits from income tax would increase GDP, gross domestic product, by 0.1%. It would increase wages by less than 0.05%. And it would be a one-time boost in the number of full-time equivalent jobs in the range of 64,000. So it's not saying it would create 64,000 jobs, but it's basically, hey, it's equivalent to creating that when you talk about its impact on GDP. So that's what you're looking at in terms of, hey, if you were to actually see Social Security benefits made tax-free, what are the impacts? You end up with the trust funds being depleted sooner. 2 years is the projection from the Tax Foundation for Social Security, 6 years sooner for Medicare, and it makes kind of a trivial dent in increasing overall GDP is kind of how I would look at it. Is that fair?
Yeah, I think that's a good summary. And yeah, whether you're looking at the Tax Foundation or, quite honestly, the Social Security website themselves has the same. Not the analysis that the Tax Foundation does. They don't do those types of analyses, but they clearly stated on their website, under legislation acted in 1983, the trust fund receives income based on taxation of those benefits. So, yeah, that's how it all works under the hood and why we were quite critical of that change. And, frankly, like I've said, it cuts both ways because on neither side of the aisle is anyone talking about the fact that the trust fund is going belly up and providing anything realistic to a solution to it.
No.
There was just one. The problem is that there was only one solution proposed to Social Security, and it makes the problem worse.
Right. It's if we actually want to have a real conversation about fixing Social Security, let's have the conversation, because unfortunately it's going to result in some pain for different people depending on exactly how we end up fixing it. Because the status quo doesn't work given the way demographics and the working age population have shifted over the last 40 years now.
Yep.
And if we're not going to acknowledge the reality of where we stand right now, then we're kind of dooming ourselves to some larger changes that are going to happen, 8 to 10 years from now, as opposed to smaller ones that we could, make now, or even smaller ones that we could have done in the past. But unfortunately, we can't go back in time, Michael. We can't. I bought a DeLorean and it did nothing. It just
kind of drove.
It didn't even do that well most of the time. Oh, wait. Hey, Mike, it's 1999. We can fix Social Security now.
Yeah. It doesn't work that way, unfortunately.
No,
I'll voice my opinion once more that I think my opinion will be that the solution to fixing Social Security is the dumbest of the solutions, because Congress usually comes up with the dumbest of the solutions, which is they dissolve the trust fund and they just pay out of the general fund, all the benefits that people are owed, therefore running up the deficit even more.
Well, they don't even have to dissolve the trust fund for that.
Right, yeah.
You can just say, okay, we're going to pass legislation that we no longer have to reduce benefits once the trust fund is, depleted.
That seems like the most likely and most unfortunate outcome for the fix to Social Security, in my opinion. And they probably pass it the night before it runs out of money.
You're kind of right. Like, I don't disagree with you at all. It's
dumbest solution, and most likely.
Yeah. And actually no, that's going to be part of it. The other part will be, hey, we are going to, raise the Social Security tax for, let's say this happens in like 2033. We're going to raise the Social Security tax for anyone born in 2020 or later. So it's like when that group of kids graduates college, then they start paying more in tax because they weren't even able to vote on it or something like that.
It's akin to like opening up a credit card in your infant's name.
Yes. It's just wonderful. It's
great.
It's just wonderful.
So good.
I'm so happy that we get to cover this for the next 10 years. It's going to be a real party. Mike, anything else on the U.S. economy reaching a tipping point? I know we were kind of halfway through that conversation last segment, maybe 2/3, maybe 3/4. How far did we get through it?
No, I'm good. Let's take a break, and then when we come back, I want to talk a bit about housing and mortgages, because that's going to be what a lot of people care about now that rates are finally starting to drop a bit. So let's take a quick break
when
and
we
we'll cover
return.
that.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Last year, we introduced you to Mark Vaughner, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud partner of the Disabled American Veterans, Department of Massachusetts. The DAV does incredible work, and it was one of the first organizations I became familiar with after my military service ended in 1984. As I built my company, Veterans Development Corporation, I did it knowing that I'd be giving back to fellow vets who need jobs, support services, medical supplies, and much more. I work with disabled veterans every day, and is one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans, Department of Massachusetts, in this year's DAV 5K Boston. Please join me in supporting this tremendous cause by taking part in this year's event or by making a donation to the DAV.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Recent reports suggest that a record 4.1 million Americans may retire this year alone. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're one of them, you'll want to have a retirement plan in place that focuses on several objectives. When to actually retire is a very important one to consider. Retiring early while giving you more time to enjoy life after work also means you'll need your money to last longer. Retiring later may not give you as much time to enjoy life's pleasures, but you'll have more time to save money. It's important for your retirement plan to strike a reasonable balance, and our new guide may help. It's called A Day in the Life of a Retiree, and it's yours free by calling 800-393-4001. The guide discusses these issues and more, so please call 800-393-4001. Once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets is your most important financial responsibility, and creating a trust is a great way to help. Cushing & Dolan are experts in elder law. Their brand new guide out this month is called Unlocking the Power of Irrevocable Medicaid Trusts. There are many types of trust to consider, but irrevocable trusts can establish the kinds of safeguards you'll need to protect your assets long term. Learn about how the trust can protect your assets from probate and potentially eliminate your estate taxes. If you're closing in on retirement and have an existing trust that needs a second look, or if you need a new trust to ensure that your assets are secured, call Cushing & Dolan right now at 866-848-5699 and let them help you create a plan that gives you confidence in your financial future. That number again is 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Are you retired like me, and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
All right, Mike, I know you want to talk a little bit about mortgage rates and how they could affect the housing market. So what do you want to say about mortgage rates?
Well, first off, where they are. I mean, we've seen a pretty substantial drop here just over the last week. Where are we sitting now, Chuck, according to Mortgage News Daily on the 30-year fixed-rate mortgage? My guess, 6.4?
6.63. We've bounced up a little bit because the 10-year Treasury went from 3.6 to 3.9 this week.
Yeah.
So it came back up a little bit, but we're firmly in the mid-6s now, which you go back to April, we were in the mid-7s. So you're down almost a full percentage point from the highs and about 0.75% from where they've been for much of this year.
In either case, even where they are now, you are approximately still twice as high as where we were in early 2020 and much of the 2010s when people were locking in those 30-year rates down in the 3% range or 4% range still, but substantially higher cost to get into a home today compared to really most any time for the last several decades here. And the problem with that, as I see it, Chuck, from just a pure retirement and financial planning perspective, is some of the most common bad choices that I see made when it comes to finances has to do with homes. And you get why, right? Because it is the American dream. I'd say really bad decisions about cars in America, followed by sometimes bad decisions about homes. And there's, I think, good ways to handle those types of things, and unfortunately tough ways where emotion bleeds too much in, and we're trying to keep up with the Joneses when it comes to our homes and what we put into them, and it can go overboard sometimes. I know there's a lot of people out there who have been struggling with getting into a home, or maybe it's been downsizing over the last few years, wanting to do so, but struggling to with mortgages where they are and where to head from here. And the question that we frequently deal with, Chuck, on our end is, how can I leverage my retirement portfolio properly when it comes to moving from one place to another. Maybe I'm relocating to a different part of the country. Maybe I'm just trying to make that downsize work, but I've been in my home for 30 years. And that's oftentimes where a planner comes in, where a financial planner can help you assist with, okay, not only, hey, if I'm buying that first place, how do I need to save? Where should those savings go? And what should be my target? What's affordable for me beyond what the bank is telling me is affordable for me? And then second of all, if I'm doing a relocation or if I'm doing a major renovation, how should I be paying for it? Should I be using financing? What is going to be the cost of that financing? And again, how can I maybe leverage some of my other assets to do this properly? If you're facing questions like this, if you're not sure where to turn about your housing decision and how to make sure that it's not going to turn your financial plan in the wrong direction, please give the folks at Armstrong Advisory Group a call. I know, we talk a lot about the economy and investments here, but these are the types of questions that we work with our clients on day to day to make sure they're not harming themselves in their futures. Again, that phone number for the Armstrong Advisory Group to set an appointment is 800-393-4001. We have offices located throughout New England, and we work with our clients regularly on these types of questions that ultimately do impact their investments and their overall finances. That phone number, once again, for the Armstrong Advisory Group to book your free consultation is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, do you want to talk more on housing or do you want to talk credit card debt?
Dealer's choice, Chuck.
Let's do more on housing. There's a piece from the Boston Globe that, while it brings up a valid point, it's also a little bit cherry-picked and still not really hitting the main issue. It's titled, In the Massachusetts Suburbs, Mansions Are Taking Over. And it talks about how you've got, larger and larger homes that are being built. They interview one builder who is putting attached bathrooms in every bedroom of houses that he's building, which is just wild to me. Sounds great, but again, very expensive. But I think it's also important to note, so this piece, I'll quote here, what it says, homes of 7,500 and 10,000 square feet, more than 6 times the average size of a new home in 1980, are going up in places like Lexington, Wellesley, and Weston. Now, if you're not from Massachusetts, those names don't mean anything to you. If you are from Massachusetts, those are probably 3 out of the 5 most expensive zip codes in the state.
Forget about that, Chuck. They're by the country.
Right, those are probably 3 of the top 20 zip codes for pricing of homes in the country and median incomes. So just because Lexington, Wellesley, and Weston are seeing 10,000 square foot homes going up doesn't mean that's going to happen everywhere. They've been going up there for the last 40 years. That's just how those communities are. It's great for the people who have money to spend on them and can live in them, but that's not really a representation of average America either.
Here's the piece that go ahead.
There are some good points that are made in this piece, which are, hey, we've done so little building in the Northeast that we're hamstringing ourselves as far as potential housing supply, and we now are starting to see signs that even higher income earning people in their 20s and 30s are seriously considering, or in some cases in large numbers, moving out of state because they find the state so unaffordable and the region so unaffordable. That's a real problem, but it's not represented by the homes that are being built in Weston.
No, it is not. But a few other stats here that they point out. In 1987, only 8% of homes in the Northeast had 3 bathrooms or more. By 2023, it was 40%. And so, again, that speaks to, I guess, desire for size of homes and complexity of building and stuff. But that same builder points out that, look, he bought these lots in Newton a few years ago, and his goal and plan was, hey, I want to build 3 family units here. What happened? Newton said no, and so instead, he built what he could to make his profit, which was a McMansion that sold for big money. If we will allow common sense zoning, then builders will build more units.
Mike, do you know that the single-piece ceramic toilet was only invented in 1870?
More you know. Thanks, Chuck.
We're done with this hour of the program. More coming up in just a little bit.
Despite overwhelming support from Democrats and Republicans, time is running out for Congress to pass the AM Radio for Every Vehicle Act, which will keep AM radio in cars. Text AM to 52886 and ask Congress to bring this bill to a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to STOP.
This message furnished by the National Association of Broadcasters.
Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are 3 of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free, because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
If you're getting close to retirement, you've likely thought about how you'll spend all of your free time. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and with no more 40-hour work weeks or hour-long commutes on your agenda, you might find yourself on the links in Florida or traveling the world with your spouse and family. The financial pieces of the retirement puzzle are important. Having a specific plan about how you want to live day-to-day in your post-professional life is just as important, and our new guide called A Day in the Life of a Retiree may help. You can get it today by calling 800-393-4001. In the guide, we're going to discuss how to connect your financial needs in retirement to where and how you'll be living. Call us again at 800-393-4001 and get your free copy today. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org, CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you today, and markets eking their way into positive territory. albeit at a very slow pace thus far this morning. But you've got the Dow up 24 points right now, about 0.06%. The S&P is up 17 points, about 0.33%. And the NASDAQ up 52 points as well, about 0.33% for that index. So all three major U.S. indices are in the green today. 10-year U.S. Treasury is down 5.3 basis points to 3.944%. We got oil up 48 cents a barrel on West Texas Intermediate to 76.67. AAA average for gas prices nationally down 0.1 cent overnight, Michael. What a celebration we can have with that, to $3.45 and 0.4 cents. And we have gold up $4.90 an ounce to $24.68 and 20 cents. Mike, when I came in on Monday morning, the financial media stations, CNBC and Bloomberg, were just they were filled with guests who were yelling just very loudly. And it was wild. It was just, it's like, oh, do you have to say it like that? Gosh. And amongst those who were yelling was none other than Jeremy Siegel, who's a Wharton professor, who admittedly is really smart, like way smarter than I am, but was noting that the Fed needed to cut interest rates 75 basis points this week and then do another 75 basis points in September. And look, time will tell if Siegel actually ends up being right, but generally emergency rate cuts between meetings are safe for times of like real crisis, not a 3% Monday drop that fully reverses by Friday with no intervention. Thus, and we do say thus, it appears that, these calls for these rapid and immediate rate cuts were kind of not great.
Boy who cried wolf, perhaps?
It's just something where if every 3% drop in the S&P warrants a 75 basis point cut, then we're not going to have interest rates anymore.
Jeremy Siegel has now backed off from his vital emergency cut that needed to happen, which, again, means that he refuses to admit he's wrong. He says, quote, would it be bad? No. But would it be necessary? No, not at this time. It means you're wrong. Let's take a step back here. I mean, it means...
And it's okay. Everyone's wrong in markets sometimes.
Oh, yeah, absolutely. But the problem is, when it's your job to evaluate the economy and markets, you really can't be panicking at the very sight of a big sell-off.
And specifically, here's the thing. If Jeremy Siegel wasn't calling into CNBC and Bloomberg on Monday, if he were doing it Friday morning after, a bad jobs report and saying, hey, this jobs report is bad, you need to do this now, at least you can make a case it's, hey, the economic data is the problem and we need to stop this before that happens.
Right.
But he took the whole weekend, and then markets opened, down 4%, and, Japan's down 12%, and it's like, well, are you concerned about the economy or are you concerned about the market? Because they're different things. And if you're just trying to placate markets, that's kind of not really good for the actual economy, which is what really matters to, I don't know, human beings.
Well, it's also just... If the Fed's jobs becomes, or if they become influenced on a day-to-day basis by placating the markets,
then we've lost. We've lost the plot. We might as well move to Mars and call it a day.
Well, I mean, think about just the portion of Americans that completely screws over. Maybe not screws over, but it just ignores.
Let's go before that, Mike. Before that, the purpose of markets is to drive price discovery for what something is worth. If every time there's a fluctuation in markets we say, nope, that's wrong, we're not letting markets do their job.
Right. You are removing the basic freeness of those markets.
Now, you don't want, the world to end as in, 2008 where, again, we're probably days and weeks away from the financial world no longer functioning. So you have to ensure proper functioning of markets as well so that they can conduct price discovery. But... Again, when you talk about, Fed intervention or anything at that scale, it's, hey, these markets are no longer working. They're not giving us the numbers they don't want us to, that we want to see. If you're not getting the numbers that you want to see, you need to think about, hey, why am I getting different numbers?
What are legitimate examples of markets not working in the past? I want to be clear about that. Like we had...
Let's go 2008. 2008 is a great example.
Yeah.
Let's say that I am Home Depot. I sell lumber. I sell lawnmowers. I sell all this stuff. I have immaculate credit. And I can't borrow $10 million overnight because no one will lend to me. That is an example of markets not working. If we go to, 2020 as an example, March of 2020, and we say, hey, I am, again, I'm Microsoft, and I'm trying to roll $100 million in debt from one day to the next, and I'm getting pricing that is 3 times what it was the day before. Okay, that's weird. My financial, nothing has changed in my financial status. This is a systemic problem. It's not a me problem. Those are the kinds of things when we talk about proper functioning of financial markets, we're actually more referring to the debt side and being able to borrow money than what the stock is worth.
Right.
Because if you have high-quality borrowers that are being locked out of the system or being charged way more than they were the day before, that's evidence that there's a systemic problem and not a problem with the company. Those are things that you see. So those are the cases where you want someone to jump in, not, hey, stocks might fall like 5% today. Well, okay, why? Well, people are concerned about recession and they borrowed too much money and invested in stocks. Well, okay. Well, isn't that bad? Yeah, for them, but what's the problem? Well, they borrowed money and they're losing in the market.
It's kind of how capitalism works.
That's the deal with equity markets. Some days you're the dog, others you're the hydrant. What are we doing here? So Monday is not the example that you want to be setting as far as the precedent for an intermeeting cut. It's got to be something where, hey, markets are breaking down and not working for people who they should be working for, as opposed to, hey, the price on my screen isn't what I want to see, make it go up. Is that fair?
Yeah. Yeah, that was the argument we made at the time. I'm glad that we were able to take a step back and say that even in the moment of a 3.5, how bad did the S&P get on Monday?
It was like 4.5 at one point. Yeah.
Even in the face of that, I genuinely think it was pretty easy to take a step back and say, this is scary. I understand people are panicking, but it's not elevated to a level where we need to be concerned about emergency action on the part of the Fed.
Let's take a quick break here. When we return, we are going to do a little bit of trivia, and then we'll talk about the Federal Reserve and whether or not they should be independent from the executive branch right after this.
Tune in for Trivia, brought to you by Applebee's. Every day at 11:20 for your chance to win cool prizes. Text us at 617-362-1385 and use keyword Applebee's. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston. It's a run and walk to support the DAV Department of Massachusetts. Saturday, November 9th at DCR's Castle Island in South Boston. Together, let's honor all who have sacrificed for our freedom. Register or donate now at dav5k.boston. That's dav5k.boston.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are 3 of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Recent reports suggest that a record 4.1 million Americans may retire this year alone. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're one of them, you'll want to have a retirement plan in place that focuses on several objectives. When to actually retire is a very important one to consider. Retiring early while giving you more time to enjoy life after work also means you'll need your money to last longer. Retiring later may not give you as much time to enjoy life's pleasures, but you'll have more time to save money. It's important for your retirement plan to strike a reasonable balance, and our new guide may help. It's called A Day in the Life of a Retiree, and it's yours free by calling 800-393-4001. The guide discusses these issues and more, so please call 800-393-4001. Once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Despite overwhelming support from Democrats and Republicans, time is running out for Congress to pass the AM Radio for Every Vehicle Act, which will keep AM radio in cars. Text AM to 52886 and ask Congress to bring this bill to a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Trivia brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, spinach and artichoke dip, and warm pretzels dipped in beer cheese. And don't forget to join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now, that's eating good in the neighborhood. Void where prohibited. Dine in only. On October 26, 1984... and again, this is our 80s theme here for trivia that we've been doing lately. October 26, 1984, Arnold Schwarzenegger was launched into mega stardom with the release of The Terminator. But things were almost very difficult for Arnold and the Terminator franchise, as he was not the original choice to play the villainous machine. Trivia question today. Which football player turned actor was the original choice to play the Terminator? Once again, which football player turned actor was the original choice to play the Terminator? Be the fifth person today to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that gift card in the next segment. 617-362-1385, and the fifth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Mike, yesterday, President Trump said in a news conference, I'll quote him here from the Wall Street Journal, "I feel that the president should have a say in theirs as it relates to interest rates. I feel that strongly." And when we talk about, the idea of a president having influence over interest rates, a couple different things come to mind as far as, hey, should the president of the United States be able to either A, set interest rates directly, or, be able to vote as part of a committee, or just, exert pressure. The first is, basically every president since the Fed has been created in 1913 has tried to exert some type of pressure on the Federal Reserve.
Yeah,
There's a long and proud history of various different presidents doing that in their own unique ways.
Yep. Trump's was more public during speeches, but others did it behind closed doors and did attempt to influence the direction of interest rates. Some to no success at all, others with varying degrees of success.
So I'm not going to sit here and say, look, like, should the president not comment on the Fed? Like, look, that cat's kind of out of the bag. It's been going on for, I don't know, 70, 80 years now. I don't really have any record of it back in like World War I, World War II, but maybe it was even happening then, but they kind of had bigger things that they were dealing with. But you can go back through the 50s and 60s, and you have, records of presidents, jawboning the Fed, all throughout that time period. So
Sure.
it's something that has happened quite a bit. As far as the idea that the president should actually have, be it a vote or the vote on, setting interest rates, what I come back to in basically any question on this is, look, even if you think that the person that you are going to vote for, be it Democrat, Republican, Independent, or any other, party of your choosing, even if you think that your candidate would be great wielding that power, ask yourself the question of, hey, if my guy loses, am I comfortable with my opponent having the same power? So as an example, if you are a Democrat saying, hey, I want, the president to be able to set interest rates, would you be comfortable if President Trump were the next president? Likewise, if you are a Republican saying, yeah, I'm comfortable with, Trump setting rates, ask yourself, would you be comfortable if Kamala Harris decided to set interest rates? And this, I think, is a good exercise, because if you're comfortable with your candidate doing it but not with the other, then it's probably not a power that you want to be granting to a single person. Is that fair?
Yeah, I think it's well said, Chuck. And we can talk about why this is just a universally bad idea of the president controlling something so fundamental to the economy. But let's be clear. The last 70, 80 years of pressure that's been exerted on the Fed, it's largely been in one direction, if I'm not mistaken, right?
Lower. I want rates low. Like, very
rates
rarely do you
lower.
find a president being like, hey, I'm wondering if you could raise interest rates.
Of course
for me.
not. Of course not. Everybody hates higher interest rates. It makes mortgage rates higher. It makes auto loan rates higher. It makes everything more expensive. Nobody wants higher interest rates. It is a trade-off that we all accept as part of maintaining a stable economy. And so to have somebody who, by their very nature, needs to be popular in order to remain in power, it's just a fundamentally stupid idea. And I think that exercise that you brought up, Chuck, when it comes to any presidential power, is the right one to utilize. And this does not just apply to the Federal Reserve. Obviously, executive power has been expanded greatly over the last, what do you think, concentrated in the last decade
Really
and a half?
the last 40 years, I would say, since like since kind of even 35 years, like since the early 1990s in particular.
And so we've seen that power exerted and used significantly over the last few decades, and I'm sure that everybody can look at certain executive actions from one party or another that they fundamentally disagree with and don't think should be in the power of the White House. And this is, you and I, Chuck, are probably, honed in on this one because we talk about the Fed all the time, and we're more focused on this one. And I happen to think it's, potentially hugely impactful. And there are other countries around the world that do not have that central bank independence. And granted, they're completely different economies and countries than ours, but it typically doesn't go well.
No, it's something where, again, I think you have to be very careful with the power that you grant to any one person. And it's not to say that like Congress always gets it right either, but it's tougher to get 435 Congress people to agree on things and 100 senators to agree on things than just having one person making arbitrary decisions. Now, people will say, hey, look, the Fed is, just a group of, 12, 15 people. They make those decisions. Yes, but they also have to be confirmed by Congress in order to make those decisions. And that's why you're not just trusting like that one person with that power, by, having them there. It's, hey, they have to be confirmed by the larger Congress, which means that they have to be able to agree that this person is fit to hold that role. And I don't know. I'm not someone who loves a ton of executive power. You know, it's when you talk about, you know, again, do you want the president to be able to override the will of Congress and things like these are things that, you know, really get at the fundamental nature of what America is supposed to be and how our political system's supposed to be set up. And look, if it were up to me in general, I'd prefer to see an awful lot more power returned to the legislature as opposed to, you know, residing in the executive branch. But the complicated thing is that as we have become more divided politically as a country, it's created almost a vacuum in that because Congress doesn't do as much as it used to, the executive branch has kind of been able to go out and grab power because Congress isn't doing these things. And it kind of sucks is the technical term for it. But look, this is the world that we're in, and you've got to make the best of whatever it is. And ultimately, it's something where, hey, if you can even just kind of slow the bleed of power away from Congress towards the executive, I'd prefer to do it. And the reason why is, in general, I just don't trust any one person, whoever they may be, with having all of that power held in their hands. I'd rather see it distributed across a wider body.
Yeah, but ultimately, when it comes to the central banks, when it comes to the Federal Reserve, obviously, look, every single appointment to the Federal Reserve has political bias. They get talked about,
of course,
how they have party affiliations, et cetera. And so that's going to be there. But the fundamental reason why you want an independent central bank is because you don't want a central bank that is beholden to election cycles and beholden to making somebody look better or worse ahead of their election. And the Federal Reserve, I have to say, of all American institutions, has been one of the better ones that has been able to maintain their independence and I guess kind of an unbiased viewpoint, or at least a reputation for an unbiased viewpoint, I think.
Taking a look at markets as we head towards the bottom of the hour, the Dow is up 29 points, S&P is up 12, NASDAQ up 26, so a modest rise today. We're going to take a quick break here, but when we return, we're going to give our trivia answer, and then we're talking Apple and Google and how they may have to, you know, redo things a little bit in the wake of Google's big antitrust loss this week.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Discover the Fish and Farm Market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide out this month titled A Day in the Life of a Retiree. The big focus of this guide is about figuring out what you actually want to do with your time in retirement, not just the financial piece, but how are you going to spend your days? How does someone go about figuring that out, Mike, or starting to figure it out?
Yeah, Chuck, I love this piece because it is a lot different than our normal course of what we put together from the Armstrong Advisory Group. And what I tell people frequently, one, I'm not going to tell you how to spend your retirement. I have no idea. But the most successful retirees, and by successful, I mean the most content in retirement, who are not stressed about money, are those who have really thought through a coherent plan of not just what I don't want to do in retirement, i.e. work, but what I want to accomplish and do when I'm done working.
It seems to me that it really has to be something where you say, I'm retiring to do this, not retiring from doing that more than anything else.
And often that's the focus because, look, for a lot of us, work is extremely stressful. We've been supporting families for decades, and the allure of not having to do that, not having to pull in that paycheck anymore is really tempting. But I'm here to say that I've looked at a lot of this from a lot of different people in all sorts of different industries, and the most successful ones are the ones that are retiring because they're passionate about something that they want to do that they finally have time for.
Our guide is titled A Day in the Life of a Retiree, and you can request it by calling 800-393-4001. Again, the guide is A Day in the Life of a Retiree, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
Trivia question today was, which football player turned actor was the original choice to play the Terminator? That'll be O.J. Simpson. The head of the studio that produced the Terminator wanted O.J. Simpson to be the murderous machine before director James Cameron vetoed the decision because he felt that Simpson wouldn't be believable as a killer. Interesting. We have two winners to announce today. Winner of the Financial Exchange Show t-shirt was Carol from Providence, Rhode Island, and the weekly winner of the $100 gift card to Applebee's was Bob from North Falmouth. So congrats to both winners there. And trivia is brought to you by Applebee's. Enjoy half-price late-night appetizers after 9 p.m. and join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now that's eating good in the neighborhood, void where prohibited, dining only.
Mike, last week, was it last week or was it this week? This week's kind of been, there's been a lot.
There's been a lot going on. I don't know.
Recently.
I think it was this week.
Was it this week?
Yeah.
Recently.
Yeah, it was this week, I think.
Recently, good word choice, Tucker. A judge for the U.S. District Court of the District of Columbia, Judge Amit Mehta, ruled in a 300-page ruling that Google had broken antitrust standards. Quote, Google's distribution agreements are exclusive and have anti-competitive effects. Boom, right there. One of the things that was notable in Google's business plan over the last, decade plus is that they pay Apple a ton of money each year to be the default search engine on Apple products. So when you go and buy a new iPhone and you open it up, you go to search for something in Safari, Google's the search engine that does it. Now, you can change this in your settings. Like, you can go into your settings and change it so that you can, use a different search engine if you want to. They allow you to use Google, Yahoo, Bing, DuckDuckGo, and something called Ecosia.
Sounds like a disease.
I had a bad case of that right after I finished up with my Stellantis last year.
Yep.
And in any case, you can change these, but basically no one does aside from me. I'm using DuckDuckGo as kind of a one-year experiment that, honestly...
Chuck's a weirdo. The rest of us use Google.
Can we just talk about search in general right now?
So long as
search
we have time
sucks.
to get back to the Apple stuff.
We do. Search sucks right now, across the board. I've used a number of different search engines, and here's why it sucks. The first is just this general trend towards search engine optimization, which is, hey, it's not enough to just write good information. You have to write it in a way that's compelling to search engines so they find you.
Bullet points, effectively, yeah.
No, not bullet points. This is why if you go and try to look for any recipe, before you get to the recipe on the page, you have to read through 8,000 paragraphs about, the trip to Paris that spurred this on, and then I ate a croissant, and that's why I make asparagus with lemon now. and you're like, I don't know what this is all for, but that's why you have to do that, is because search engines, their algorithms, like that stuff, not just the recipe. The other piece that's gotten really bad recently is AI results showing up in search that are absolute garbage. And I found this in a few instances in the last couple of months, and you're going to look for something, you're like, I'm trying to find there was one very clear thing where there was I forget what the song was, but it was the lyrics were kind of obscure, and I Googled or DuckDuckGo, and I'm like, hey, what does this song actually mean? And I click on the first thing that comes up, every person on the internet, and it's just 8 paragraphs of the same thing regurgitated in different formats that's clearly written by AI. But the search engine loved it and put it as the first result. And it's killing search and killing the internet, quite honestly, in doing it. But to get back to this Google Apple thing, the likely end result of this is that Apple is probably not going to be able to receive these payments anymore to make Google its default search engine, and instead is going to have to give users the choice when they set their phones up, hey, which of these 5 search engines would you like to use as your default? They did this in the EU a few years ago because of antitrust stuff over there, and basically everyone chose Google anyways.
Yeah. So here's where it comes back to, and why this is probably going to land in court for years to come with millions of dollars additional spent. The judge in this case specifically pointed out that they are not really weighing in on the consumer harm doctrine as part of the ruling. So yes, Google is acting as a monopoly. He found them to be a monopoly and acting as such, but couldn't really find the consumer harm in what they did. And that, look, I'm not a lawyer that studies antitrust law, but we've talked a lot about that, and why it's been so difficult to prosecute cases against big tech is because it's really tough to understand what might have existed should Google not have been so dominant over the last decade. How would I have been better off had Yahoo or Microsoft or DuckDuckGo taken a more dominant position and innovated in a way that I can't really imagine? It's really difficult to make that argument, and I think that's why I myself am very curious how appeal goes on this, because it's a challenge to imagine where it's going to go. But yeah, to your point, I do wonder openly about how much Apple's going to be able to collect on this side now that it has been made quite as public as it has.
Elder life planning can be overwhelming, so make sure you're prepared or you could make costly mistakes that affect your overall plan. Irrevocable trusts are the most common type of trust that folks use for financial protection. While they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Cushing and Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trust. Learn more about how these trusts can benefit your family by calling 866-848-5699. That's 848-5699, or you can simply go to their website and request it there at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Mike, can we just quickly discuss a little bit about some of the search engines that existed back in the 1990s and just see if you remember any of these?
Ask Jeeves
comes
to mind.
Ask Jeeves. What else?
What do you got, Chuck?
I got a whole list of them. Do you remember Web Crawler?
No.
Excite.com?
No.
Reference.com?
Yes.
No.
I do.
Yahoo. Everyone
Sure.
knows
Yeah,
Yahoo
sure.
still. Do you remember Magellan?
Nope.
Mm-mm.
I don't either. Apparently there was a Search.com.
That makes
sense.
sense.
That existed.
Yeah.
Here's another one I bet you remember. Do you remember Alta Vista?
Yeah.
Yes.
Yeah. Yeah, famously, I think the town in Parks and Recreation, the TV show, only uses Alta Vista to search.
What about Lycos? You remember Lycos?
Yeah, I remember Lycos. Okay.
What about What You Seek?
No.
Hotbot?
Nope.
InfoSeek?
Yeah, no.
No.
GoTo.com?
Yes.
No.
Google. Okay, Google came around in 98.
No.
That's great. Dogpile.
Dogpile, I remember. I brought that up to my father, and he thought that I was searching for bad stuff.
I was going to say.
Yeah.
Don't want to punch that in the old browser right now.
Right, you kind of wonder like what's on these now, but you don't want to try to access it from a work computer.
Nope, absolutely not.
Yeah. I'm pretty sure I remember like my middle school librarian, teaching us about Dogpile, and everybody just laughing.
Sounds great. Let's see. How to turn $9 into $15,000. Buy a presidential ticket domain years ahead of time.
Smart.
Apparently some dude back in 2000 bought the domain harriswalls.com.
In 2000?
2020, sorry.
2020 makes more sense.
I was going to say.
Yeah, he bought it on Alta Vista. No, bought it in 2020 for $8.99 and apparently just sold it to the campaign for $15,000.
I mean, I'm sure that this is now that this is published wherever it is published, I'm sure that this is much more expensive, but seems like a good way to go spend a few bucks. Right? You buy 50 of these, you might hit on one of them.
You might not.
So one of the big problems, actually, for a long time in the internet has been domain squatting, where people just buy up these high-value domains and just sit on them so no one can use them. And they're just, like, demanding increasingly high numbers, even for, again, just, very simple, very basic stuff, but that someone might want to have. But, yeah, apparently, here's the other thing I wonder about this. Have other domains did this guy buy up?
Right. Yeah.
Like, what was his total spend?
His ROI was definitely not just on the $8.99. He had to have been doing this as a strategy.
But here's the thing: even if you bought 100 of these,
still
great.
be
You spent $1,000 and made 15.
Yeah. Good idea.
So
I like the internet story that's probably made up, but of the of like a bunch of tech bros sitting in a Starbucks dreaming up their new business idea, and the guy sitting close by in the Starbucks just buying up all the domains while they're coming up with the ideas for the business.
Yeah, I could see that. Let's take a quick break here. When we come back, we're going to be joined by Paul LaMonica from Barron's, and we're going to be talking about Kellanova right after this.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Recent reports suggest that a record 4.1 million Americans may retire this year alone. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're one of them, you'll want to have a retirement plan in place that focuses on several objectives. When to actually retire is a very important one to consider. Retiring early while giving you more time to enjoy life after work also means you'll need your money to last longer. Retiring later may not give you as much time to enjoy life's pleasures, but you'll have more time to save money. It's important for your retirement plan to strike a reasonable balance, and our new guide may help. It's called A Day in the Life of a Retiree, and it's yours free by calling 800-393-4001. The guide discusses these issues and more, so please call 800-393-4001. Once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I joined the Marine Corps when I was 18 and served proudly from 1981 to 1984. As CEO of Veterans Development Corporation, my goal is to give back to the veteran community, many of whom are employees of this company. This is one of the reasons I am so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K Boston. The DAV works tirelessly to support many of our disabled veterans and provide them access to critical services that help them live comfortably every day. I hope to be part of many more success stories of our vets being able to achieve their goals and dreams when their service ends.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Every single day, more than 2,000 U.S. companies face a cyber threat or attack. The Boston Red Sox in Fenway Park chose Centripetal as their official cyber network security partner to ensure the protection of their network and ballpark. Intelligence is the answer to protecting your network, and Centripetal is the global leader of intelligence-powered cybersecurity. The choice is yours. Are you going to be another one of those attacked companies? Or are you ready to experience a radical new cybersecurity solution? Find out why the Red Sox chose Centripetal at www.centripetal.ai.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up, because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit dav5k.boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Enjoy perfect weather, world-class dining, incredible beaches, and a vibrant nightlife. Head to visitusvi.com and book your trip today. No passport is needed, and there's no money to exchange. Take your next vacation on America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com to book your trip. That's visitusvi.com.
As promised, we are now joined by the one and only Paul LaMonica from Barron's. Paul, how are you today?
Good, thanks. How you guys doing?
We're doing great. Let's talk a little bit here about Kellanova. And I know you've got a piece in general kind of on safe havens this week. And the first thing that I guess I want to talk about with Kellanova is for people that aren't familiar with who they are, they're probably a more familiar company than they think. It's just the name's a little different these days.
Yeah, remember Kellogg? Everyone knows Kellogg. They broke up and spun out from the cereal side of the business, a company called Kellanova that has kept the old Kellogg K ticker symbol, and that is a company that owns frozen foods and snacks. So Eggo waffles and Pop Tarts and Cheez-Its. So it's a very well-known brands, even if investors and consumers don't recognize the new corporate brand name. But Kellanova in the news, not just because consumer staple stocks held up relatively well on Monday when the Dow plunged 1,000 points. There's also reports that Mars, the giant privately held snack giant, is mulling a potentially $30 billion takeover offer for Kellanova, which would accelerate some of the consolidation that we've already seen in the food and snacks business. There have been a couple of big deals in the past few months.
Paul, what makes them so attractive? Because for the last several years, the story that's kind of been out there in the background has been Americans moving away from established brands and things like that. And is this a case where these brands are strong enough that they've been able to resist that somewhat, or is there something else going on here?
Yeah, that's a great question. I mean, I think there are a couple of factors at play. Yes, consumers who are tired of high prices and inflation when they go to the grocery store, there has been the shift to private label brands in some respect that has hurt larger food companies. The Wegovy Ozempic effect as well. A lot of people wondering whether or not we're going to snack as much when we're all taking these injectable GLP-1 drugs to try and shed some pounds. But companies like Kellanova still have these very recognizable, powerful brand names that also, let's be honest, they get a bit of a pop culture boost as well. I mean, Eggo's, I think had become almost synonymous with Stranger Things, even though we're waiting forever for the next season to finally drop on Netflix. But, they got a boost from that. And then also remember the Pop-Tart Bowl and the huge amount of press that the company got for the gigantic Pop-Tart that they toasted after that college football game. A lot of the food companies are being very innovative with regards to their marketing to keep their brand name in the headlines. And I think Kellanova's done a pretty good job with regards to those two brands in particular, Eggo's and Pop-Tarts.
So when you look broader just than that particular company and look at how some of what are historically safer parts of the market held up this week, what kind of trends did you see just across the board there? Was there anything that was consistent?
Yeah, I think that you did see, some of the utilities hold up a little bit better, the kind of quote unquote bond proxies, other defensive oriented names. And then just even look at, how the market has rebounded in, the past couple of days. Eli Lilly, of course, a defensive oriented stock because it's a giant drug maker. They might be one of the factors that people investing in Kellanova have to worry about because they make Mounjaro and Zepbound, the key rivals to Novo Nordisk's weight loss drugs, Ozempic and Wegovy. But what I think Eli Lilly earnings show is that investors are still going to reward companies that have great profit growth and strong guidance. So that is something that investors just need to look at. The economy may be softening and slowing, but it's not falling off a cliff. You should be able to find companies that can report decent earnings growth going forward.
Very good. Paul, appreciate you joining us today. Thank you so much for the time, and I hope you have a great weekend, and we'll talk to you soon.
Thanks a lot. Have a good one.
That is Paul LaMonica from Barron's talking about Kellanova and other safe havens over the past week. Mike, what have we not gotten to that you'd like to cover here?
Stop and Shop, local grocer here to New England, is closing up 32 stores. We've covered this for a couple weeks now that they're going to be closing a lot of them up. CEO has been pretty public about the fact that these were underperforming stores. A lot of these, we had our leases coming up anyway, and so that's why we're closing them, not because we're having challenges. But I have to say, it caused me to think a little bit about where I grocery shop, and my problem with Stop and Shop is not that they're a bad grocery store. I generally find everything that I need, and at sometimes a lot better prices than other stores that I go to. My problem is that I never think of them. I happen to go to one if I'm passing one, but if I want to go find my cheap groceries, I'm hitting up Market Basket, Walmart, or Aldi. Yep. If I want my, I'm looking for something fancy or organic, then I'm going to Wegmans or Whole Foods. Actually, this weekend I'm planning on cooking like a big lamb cut of meat. I'm going to go to Wegmans because I'm pretty sure they're going to have it and it's going to be good quality. Trader Joe's kind of fits into this weird quirky place where there's some specific items that I want that I can't get elsewhere, so I'll go to Trader Joe's. I don't have Stop and Shop doesn't fit into any of those for me, and so I don't think about them when I'm buying my groceries.
Yeah, they're just kind of they're this middle ground.
They're just there, like Shaw's. You exist, and I don't have any reason to go visit you.
That was where I had my first job, Mike, at a Stop and Shop.
Well, yeah. I don't know what to tell you.
All I know is they charge a dime for every bag now, which is ridiculous. And
Doesn't everyone do that?
They rip immediately, though.
At every Stop and Shop?
No, it's just Stop and Shop as far as I know.
I think that's just where you are.
I don't think so.
Anyways, stocks right now, major indices still floating around flat. Some are down, some are up. We will see you on Monday. Have a great weekend, everyone.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston. It's a run